Now, I want to explain to you what, broadly speaking, this model is trying to do. It is reacting to two things simultaneously. On the one hand, as you can see here on this blue line, this is the blue central bank liquidity line. The model is reacting to this tailwind. So it's reacting to the fact that we are in again, a relatively mild macro environment still. Now, the war changed that. So over the past 3 weeks, we have not been in a mild macro environment. However, these liquidity injections that we've already seen last year are starting to work their way into the crypto markets in the way that they always do. It's 3 months later. So this is a benign tailwind. It's a benign macro backdrop against which we have the headwind of the war. And so we have two competing forces here. One is bullish, a bullish macro environment, a weak dollar. All of these things contribute to risk assets gaining upside momentum. On the other hand, the war is a wild card. It is, and usually the first few weeks of a war, the first few months of a war are bearish. Everybody's scared, nobody knows what's happening, and that is typically bearish. People want to be risk off. So the model is being pushed around in by these two cross currents. On the one hand, it reacts by issuing buy alerts whenever crypto assets react to benign liquidity conditions. And as you're going to see on the written issue, which you may not be reading first this time because this is more urgent, as these benign liquidity conditions push crypto assets higher, the model is comfortable in issuing buy alerts. However, when the war takes over, war headlines take over. What happened yesterday is that Israel started bombing Iran's oil facilities, and Iran responded in kind, which the market sees as an escalation, and rightly so, up until now. And I believe this will broadly be the case, but the oil infrastructure has been preserved. This is the difference between a global conflict and a local conflict. Now, I believe that eventually the market will settle on this is a local conflict, and all of the crypto assets, all risk assets, will line up with their traditional macro catalysts. In other words, I do believe that eventually, as the situation calms down, and I know it's always darkest before dawn, it's really difficult to see how the situation will calm down. Um, I'm going to do a few interviews, by the way, on YouTube where you can see what my thoughts are on that. I don't want to belabor this point, but I do believe that eventually things will calm down, not on the conflict itself, but on its impact on the rest of the world. And as that happens, you're going to see crypto surge. We already saw that earlier this week. On Monday, we had a spectacular rally. Solana was no exception. This is what you're seeing here on the screen. And so as soon as the situation calms down, crypto rallies sharply. Hopefully, calmer heads prevail. As you're going to see in the written issue, I do believe the reversal is coming as early as next week, or on the 24th or 26th of March, because I'm seeing a lot of reversals, not just in crypto, but in TradFi markets too. I think we have a low expected for the stock market on April 4. For oil, the high, I'm not sure if it's going to be a high or it's going to be a short-term peak. More likely a short-term peak is what the model is suggesting, but it could last for a few weeks. That will be on March 26th. And for Bitcoin and by extension crypto, we have lows between the 21st of March and the 24th of March. The 20-day cycle forecasting model is showing the 21st of March, 20th, 21st. The longer-term 80-day cycle shows a bottom on the 24th of March. So around next week, maybe over the weekend, Trump likes to make announcements every Friday. So it may be that the announcement that we get tomorrow, once the markets are closed, is actually something that market sees as positive. Do not be surprised if you see that. And this reversal could happen quickly.